Check, baby, check 1, 2. Pedro and I will be with you in just a moment. Good morning, everybody. Good afternoon, good evening. Welcome to DYOR Live here on the DYOR Media Network. As always, my name is Tom, otherwise known as Striking, here in the digital media world. And I am so glad to be hosting another episode of this great show called DYOR Live. Ladies and gentlemen, it is October 29th, 2025. 2 more days left in the month, 2 more days left for our plan to come to fruition. Bitcoin tanking right now. I'm hearing the thunder going off in my ears from Fiat Leak, giving me the notification that the 24-hour low has just been broken again. And of course, it's Fed Day. It's Fed Day. It's Fed Day. Boop, boop, boop. Some of you don't care about this at all. Pedro and I do care about Fed Day because it's always an interesting day in the trading world. There's people that trade the markets today, and there's people that stay out of the markets today, and then there's also people that have positions and they hold throughout the day, and it doesn't matter at all to them. But for some people, it makes it lots of fun. But for all those of us that talk about what's going on in the world, the little things that Mr. Powell has to say today, and the people that dissent on the Open Market Committee, will be interesting to learn if there's other news coming down the road for cuts, lack of cuts. Yesterday, Pedro talked about maybe there won't be a cut. He's going to bet against Polymarket. He's going to put the big money down and bet against Polymarket and say, hey, we going up. And we shall see what happens today. You never know what's coming out. I mean, if they don't cut, oh my God, would the markets be roiling? Anyway, they're already roiling. Maybe the market's getting out. But before we talk about the Fed and all that and bore people to tears with telling people how much Donald Trump hates Jerome Powell, let's talk about Bitcoin. Bitcoin's right in the process of tanking right now, but not unexpectedly. Not unexpectedly at all. What is going on with the Bitcoin, Pedro?
So we talked about it. It all depended on what it was going to do into the evening, right? So Bitcoin was really simple. We talked about yesterday that if it was going to sell off, we would want to see it go up into the evening, right? Go up into the evening and then see a bit of a sell off, and then we'll see from there. Now, what's interesting is that Bitcoin has come down to an area a little prematurely than what I was expecting. So I talked about it getting down to that 8-period moving average and then finding support there, right? And then potentially coming down to that 108. Well, we're already coming down there already. So I thought we would literally stay more up in this level. I didn't think we'd close as hard as we did yesterday. So the fact is that we're now touching that 8-period moving average is a major point of saying, you know what, they might want to push this up, which means if they're selling it off right now into the eve or into the this session before we actually come into the market or into the report, I'm now expecting them to push this market up, which means then that we may see a market push up and them lowering rates. I know I just switched it up on you, but it's all based off the market, okay? Now, I'm a little hesitant to say that is still because what we're seeing right now in traditional markets, the S&P 500, we're watching the market now continue kind of, it's sideways. We're still in the morning session and into the evening session on the 5 minutes. So if you look at our 5 minutes, this is we're setting in. So the lows of here, we saw it go up from the evening, which I was like, ooh, yes, they're gonna take some money. They're gonna drop this. And in that same sense, now that they're selling it off to the lows here, it kind of puts me at a point where I'm like, maybe they're bringing it down to push it up. So that's where I'm just like, I'm a little hesitant. I don't know exactly what they're going to do here. They may be looking to drop rates here in relationship to why now we're selling off. So again, these rates here are kind of, this is, if they lower rates, this is important to understand. It basically signifies that Powell was wrong, that they really don't know what they're doing. That, and that's the really what has happened. That's really the primary point here is that if they have to lower rates here, basically giving up the ghost, saying, yeah, we really didn't know what we were doing in this aspect and we kind of messed up. And so we have to lower rates now, almost in a way to protect the markets here and really spur on economic growth through lowering of rates. But I think what they're not acknowledging is the fact is that we've seen major layoffs. We're already
hold on, Pedro. Let's keep this to BTC for this segment right now. We'll get into the FOMC. I know this all bleeds together in one big long talk, but let's try.
We can go to that later. You're right.
Right. With Bitcoin coming. Oh, go ahead.
Yeah, thank you for bringing me back here because it really is all together right now. So BTC is basically hovering around the mark here where I expected it to come down to based off of the FOMC. And so the fact that we're down here, I'm kind of hesitant on how if they're going to drop rates, but sticking to the fact that we have Bitcoin here. If we blow through here and they don't, I'm expecting to come down to that 109, 108 area, which is sitting around here with that 50-period moving average. So this is the area that I'm looking at. The other part behind it as well is if it hits this area, this is going to be an area of demand, which is sitting right here at these around this level here again. So that 109, 108 area is kind of my play here. So, yep. One, two.
Now, Pedro, you show the 8-period and the 21 period crossing there on the on the daily chart. And to me, when the 8-period is moving up, and the 21 period is wanting to come down, curve under and stuff, that generally is bullish, isn't it? Doesn't it usually mean that the 8-period is going to take it up higher, and when it's inversed and the 21 is above the 8, that's usually signifying it's in a downtrend. So it made that crash. Cross. Made that cross. Is it possible that what you were talking about, the bounce, which you said, in fact, I spoke about this last night on the Space Lounge, that it was likely going to bounce off of the 8 and go back up. It's traded through the 8, come all the way down to the 21. And if it bounces through that, the next victim is the 200 period, and it's right at that liquidity level you were saying. But could it still naturally bounce up here, or are the moving averages in control and it wants to go down?
It all depends if it's on. That's really what it is. Are they going to use it? And you can see here they're not really looking. I thought they were going to as a position of holding, right? Like exactly, like and you're nailing it. Yes, that typically is a sign of, hey, we're going to stop here. We're looking like it, but it was looking like it, right? Because the way that we were coming into the zone, but with the increase of potential volume here and us coming into, this is always a slippery slope because you don't know if that's where they're going to stop, right? And so if I'm looking at this market here and I'm saying, okay, coming down into this level, and again, this is the 1 hour, did they put a supply wick in? Let's look at the 1 hour. Are they putting supply wicks? And no, they're not. So they are looking to push this back up. Where are they going to push it back up at? Well, this is where, again, this is where the skill set comes. And I think this is where they're going to potentially sell it off into this area here because the other area is not holding. And so this is important, right? The market is always right. So this is where you have to look at markets as pivot points. Dear Lord, bro.
Surprise!
Good. That is loud in my ears. Okay. What was I going to say? Oh, BTC. So yeah, typically yes, but again, it's difficult with this aspect because we are dealing with one of the biggest news events probably of kind of our time. If this is a huge indication, like them, if they lower rates, then it shows that they don't know what they're talking about. If they keep rates, they know what they're talking about, but then it's going to be very hard on the economy. And and the smart thing for them honestly to do is raise rates, make it very difficult on business and keep inflation low, right? But then if they do that, they know that they're keeping the American interest or the American debt high. So right. It's a difficult situation. So you have a lot of things, and I honestly thought they were going to push the market down to here and then hold it, but it's looking like they might want to push down to that 200.
All right, Pedro, we'll come back to this in a minute here. Let's take a break to talk to our audience for a little bit and do a little social media action here. Welcome, everybody. Welcome to the show. Welcome, Mr. Chuck Jansen, coming to us all the way from Oklahoma. It says, it's BTC party time, ladies and gentlemen. He's sitting on a BTC short. Burn this mother down. Well, that's good. Good job shorting that this morning. Crypto Unicorn says dumping it is not. When you zoom out, it's not dumping at all. It's just doing a little. If you look at the weekly chart, can't even tell anything's moved at all. If you look at the daily chart, you're like, it's moved down a little bit. But if you look at that 1 minute chart, you're like, damn, getting ready for a little action today. The FOMC meeting is in hour and 40 minutes, where they release the number, and then 2 hours from now they come out and do the pre-prepared remarks, and Mr. Jerome talks for an hour but says nothing, unless every once in a while they'll feed a sentence in there. But anyway, ladies and gentlemen, Pedro and I will be talking about that much of the show here today. If you got any questions, let us know. Interactive show here. We're broadcasting on Rumble, as always. YouTube, Twitch, X, and LinkedIn. Welcome everybody on LinkedIn. LinkedIn, the comment machine is not working over there today, as it very rarely does. If you want to drop a comment, come on over to YouTube or Rumble, search for DYOR Media, and drop a comment there, and we'll see it and engage with you. All right, here, Pedro, there's no ad read now, but we'll just move on to the second part of the morning here. The last thing we wanted to talk about with Bitcoin is the end of the month. October is not a quarterly end. It's not like the end of March or the end of June or the end of September. There's no triple witching going on or anything like that. But the month does end. I might point out, the 31st, ends on a Friday. This Friday is the end of the week. First of all, it's the end of the day. It's the end of the week. It's the end of the month for Bitcoin. And Pedro's typing something. Huh? Tuesday? Squirrel.
Wednesday. Actually, I was listening to you. You said it's the end of Friday that is actually ending in
Friday is the end of the day, week, and month. Like it's the actual, not just the end of the trading week month. Friday is the last day of October. So I'm guessing we're gonna see some shenanigans leading up to that, because when all the time periods kind of expire at once, a lot of people are like in the futures contract world, meaning like the Chicago Mercantile Exchange or Robinhood or any of the prop firms and all that. They trade monthly contracts and things like that. They're not perpetuals. And so people are going to be selling off or closing out their positions in October, which they're already starting to do, and move them into the next month's contract, into the November contract. Now, how is that? You know, we have the Fed moving things today. After in the afternoon today, the market will be somewhat back to normal of just general craziness, and then we have the end of the month coming, of which, if I bring up my chart here again real quickly, we had been talking about an end of the month pump, and that it could happen, it could not happen, and we still have a few days. Is it possible at the end of these month-long things where everything expires kind of at once, you see good things happen, meaning price up, or is this generally a sell-off, price down as people move from one contract to another?
It's going to be a little bit of both. It's never just one or the other. This is going to be, based off of this position, like I said, if the Fed lowers rates here, then it says that, they don't really understand what's happening because they've held rates way too long, and now they're going to have to start dropping it. And Powell's statement of we're monitoring the situation, and he's kept saying that, right? Like, okay, we're monitoring the situation. So it's not as simple as saying, it's just simple. I've used simple now like 30 times. Sorry. It's not as
easy.
It's not basic.
Desirable.
Where it's not basic math of 1 + 1 = 2. It's right. It's borderline calculus, right? Where you now have variables that you just don't understand, and it's like the moving of the stars, right? We can calculate the moving of the stars, how things correlate, and you can't. It's hard through math on a short term and long term to be able to gauge which way the market's going. So we can calculate the stars, but yet we can't really calculate.
Hello? Hello? Hold on, everybody. Pedro's screen thing dropped on us here. Pedro will be back with us in just a minute here. Let's see if I can help it along here at all. Nope, that is his connection there. All right, Pedro, we'll wait for you to come back there. Ladies and gentlemen, Pedro lost his internet connection again. Let me just set it up ready for him to come back here. You'll know he's back when that screen over there lights up with his background screen. Anyway, ladies and gentlemen, I guess let's go back to the charts here and talk about the monthly position that we got ourselves in here. Bitcoin currently trading at, let's re-rack the Bitcoin there. Down, it bounced a little bit here now, back to 11.2. Let's get my chart here. The monthly chart for October, you can see here, we're trading at 111. The month opened at 114, so we're trading below the monthly open here. The monthly open is always a key spot because if you recall, we opened up this month. Let me we opened up this month. October opened at about 114. We immediately did the super pump all the way up to the new all-time highs. Came back down, traded under the October open for many days, from essentially the 13th until yesterday. Pedro's screen seems to be coming back here now. We'll defer to him in just a moment. And now we're trading well below the monthly open. And so it is following the pattern which we speak about a lot, which is if you open up at the beginning of the month, and especially strongly, a strong open, which we did, we pumped to new all-time highs. At the end of the month, you'll see a pullback. And because this was a weird 5-week month with just way too much stuff going on, the end of the month got a little confusing. And we looked at the possibility that it wouldn't just dump at the end of the month with this big arrow here, but that it could recover and go up. And Pedro started getting a little bullish on that about a week and a half ago. Yesterday, past 2 days, been talking about how the daily price would come back down to the 8-period moving average and potentially bounce off that, and potentially start a way up. However, it's really a toss-up for me right now. Like I said, I don't have enough experience at this time of the month, this time of the year, especially this weird month, to kind of figure out what's going on. It's a toss-up for me. It's just a toss-up. Pedro, are you back with us here?
I am. Can you hear me?
There we go. All right, Pedro. I was just explaining to the folks that I had done pretty well based on what you and I talked about all month, and pretty much until this moment here. And now it's just for me, it's just like, get the coin, flip it. Ooh, bullish. Ooh, bearish. For me, there's no way to predict the end of the month because it is doing what you generally tell us, what you taught us, and you teach us. If it does one thing at the beginning of the period, it's likely going to do the other thing at the end. We opened up, and thus we're below the monthly open now, trading down.
So I was wrong. I have no problem admitting that. So we saw the
Me
market.
too.
So we saw the market go up, then down. This is the weekly, right? We saw it kind of rally back up. Saw it go down, then up, right, for the previous week. Now, it's key is that when you look at the monthly trend, I said this right here. This is really what I said. I expect it to go down, to go up, to go down, and then to continue up like this. So you have 1, 2, 3, 4. Why am I doing this wrong? Okay, what did I say? It was supposed to be down, up, is really what it was. So it's 1, 2, 3, 4 weeks. This is what I expected, is what we saw. And we saw 2 weeks come in where we had 2 sells. So it's 1, 2, this would have been the 3, and then that would have been the 4. And so that's what I was expecting. It didn't do it outright. So I was wrong in that aspect. But in the same sense, It all depends. If crypto pulls away, they drop rates, we see the market come back down into this area here, then we see it go up. Now that very much could happen, and we could see then also a sell off of the gold market, find that support that we were talking about, see it push up, and then that stock market again sell off to go back up in relationship to the idea that the debt is so out of proportion that inflation is going to eat away everything. When inflation is at a run, assets, or when inflation is at a just full out run, we see the market, we see markets that have assets go up in value. It's typically what we see. And so that's where my premise was with a lot of this, what we were talking about. Is it going to do it exactly? Not necessarily, but we did a fairly good job at calling the first couple of weeks. The third week did play out the way we pretty much thought it was going to. The only problem is this week it's not. And so we're still in the middle of Wednesday. We're going to see what happens. I think they're going to hold the rates. And then in that's going to shock everything and make everything kind of go, as I said yesterday, cattywampus. Yeah. And so again, I'm not. I call it. I call it about 75% of the time. I call it accurate, and then the other times I don't. So I'm okay with that. I'm okay with that ratio, especially on the market.
Sorry, I don't know if you heard that, but that was a mistake.
What?
Oh, I clicked to something on the sound effect machine. I was trying to get the womp womp womp, but I got something totally else.
What was it?
Okay, you asked for it.
I actually like it. That's actually a good sound. I'm like, hey.
Yes. I was like, I'm in the right area for getting the right sound, but kept getting the wrong one. Like my sound people, they changed the defaults and changed the labels for a lot of these things. So Fire Chicken says, I think it kind of fits the moment.
Yeah, is exactly what I was gonna say.
Actually, what we need then is the this one, the power down. BTC powering down, ladies and gentlemen, down to 111, 282. Once again, ladies and gentlemen, this is DYOR live here on the DYOR Media Network, 12:30 here in the East Coast. Realize that a bunch of you over in Europe changed time recently, so our show's on at a different time now. That means you, Dara, and crew over there. Some of our old viewers like Pit Monk and man, I can't even remember some of the guys we had from France and Belgium and the Netherlands a while ago. But anyway, you're watching the DYOR live show. We are an interactive show here. It's the second half hour today. Bitcoin is dumping right now, but not so much as a surprise. And we've been talking about that the first half hour. Obviously today the Fed Open Market Committee meeting is happening. Polymarket, Myriad, and everybody are saying that, and FedWatch saying we're going to cut 0.25%. Some people are saying 0.5%. Pedro is even on the record as saying they might hold it here because too many people are afraid of inflation. And a number of the Fed governors or the people that on the Open Market Committee have come out and just said, hey, we're still worried about inflation. Obviously, the Donald Trump supporters on the committee are like, cut it, just cut this shit down to zero. And other people are like, all this stuff takes time, and we realize that the tariffs haven't caused inflation as expected. People were just saying it's just going to be doom and gloom, and all the money is just people are going to be paying everything so expensive, which a lot of things are more expensive, a lot of things are not. But the general surveys from it are that the companies are eating the cost of the tariffs now because they haven't built it into their supply chain, and more importantly, consumers are not interested in paying higher prices. And Arcade in the house. Haven't spoken to Arcade in a while. Thanks very much for joining us, Arcade. But one of the things to remember, Pedro, that people always get wrong is that It's manufacturers, importers, exporters, all those people in the stores. They do not set the prices. They do not determine what you will pay for something. You determine what you will pay. That people forget that all the time. It's like when you tell people that you need more, in order for it to go up, price to go up, you need more sellers. And you're like, what, huh?
Yeah.
The buyers in the retail market, the people are willing to part with their own money. They are the ones that set the price. Now, manufacturers can set the range of prices. They're like, well, this is a car. It's going to be expensive. People will adjust to that and say, all right, I can only afford $30,000 for a car. I can only afford whatever, $10,000 a car or whatever it is per month. And the car makers can't just say, well, this is more expensive. If they just say it's more expensive, they have to say, we're making it more expensive, so we address a different demographic. That's different. But if the same stuff we're buying, I need a new computer monitor, and they're like, well, it comes from China, it's $500 now. Well, you know what? I'm not getting the $500 one from China. I'm getting the $230 one from Taiwan.
That correlates with this is that when you look at this idea that people, you can't hear me now, huh?
I can hear you.
Okay. I'm so used to this thing just messing up that I'm like, right? And this is not working. I don't understand why this is happening. Okay, my computer is just messing up today. All right, so in relationship to how and what is actually happening, and in relationship to Fed rate, in relationship with the stock market, and then the poor, middle class, and rich, there is a value one who buys something who's rich, then there's a value of one who buys something middle class. Class has been suffering, and they keep the rich rich, but the rich is rich enough now where they don't need the middle class because their money makes money for themselves and they can keep their lifestyle. But inflation is eating away at their lifestyle. But I mean, when you have, $250,000, $300,000 coming in on every month, and now that can only buy, half the time you can fly around the world, or half the time, this is where things are getting interest, and that's where we're at right now. Whereas in the past, inflation has not eaten away at so much of what the rich is doing. So you have this now value set where the rich is now having issue with inflation. You have middle class is really starting to get hurt bad, and the poor cannot even stay ahead. And because of that, because of these three tiers, right, the Fed is going through and trying to match it by interest rates. But the underlying issue is the government debt that's pushing up the value of everything. And yes, you as an individual can hold on and not buy what you want to buy, right? And we can sit there and determine whether we're going to see inflation go up. The issue here, again, is the debt. The debt is the fundamental situation, because as long as the debt keeps going up and we keep putting money into circulation, more money you have in circulation means the higher prices get, because there's more dollars chasing the same goods.
Right.
The Fed, if they keep rates high, stop the circulation of the body movement. But if they have to, because if they don't, then inflation goes up. So they're stuck in this. It's a really bad situation for them. And honestly, the best thing that they could do, and the reason why I say it looks like they didn't know what they were doing, is because they should have been lowering rates, like what Trump said a while back ago. We should have seen them lowering rates. But again, it would have been better just to peel it off and peel off the Band-Aid and scrub out the this stuff earlier than later. Go ahead.
Well, Pedro, if you remember, Mr. Powell stood up there, I don't know, in April or something, and said, "Look, we're not lowering the rates. You know, the job market. They didn't guess the job market, and I'm gonna use the word guess instead of figure it out because they guessed and didn't guess right. But they said they wanted to hedge and hold the position on rates to see what the effects of tariffs were. He said overall the economy's still going well, and there's no use to cut if we're worried about the long-term impact of interest rates, or I'm sorry, of the tariffs. And so he said, let's just sit out the summer and see how it goes. Arguably, he was right because the markets were fine. We're at our highs. People's 401ks are fat. You know, that type of inflation didn't explode again. And then he had to come back and say, yeah, you know, it's time to start easing. So if you put yourself in his shoes, he was right. I mean, in his mind, he was like, well, let's just wait. You know, nothing in the economy happens that fast, even though the media now is like, well, we got to do it now, otherwise tomorrow there'll be a Great Depression. And he's like, this shit takes a year to really get through the economy. So let's just wait and see what happens. And so now he eased it 25 points before. The GDP has still been banging every month. Obviously, if GDP is also driven by inflation, if inflation goes up, the amount of dollars that we generate goes up because it's inflated. But it's going up at a rate greater than inflation. So for him, he's right. And so now, you know, after talking that out, I could see him still seeing your position and saying, do we really need to cut it again? I mean, everything's moving pretty well. There's some people complaining about mortgages and stuff like that, but, you know, housing markets, it is what it is. You know, cutting a quarter point on the rates really doesn't affect the housing market a lot. Cutting a whole point does, or a point and a half, bringing it from 4 to 2 does wonders for the housing market, because suddenly people can overbuy houses and get too much and get in trouble later when the rates go up. So I see your point about the issue of them getting it wrong, but ultimately being happy with it. They're like, nah, whatever, it worked out. The economy's still cooking along. You know, obviously we have, you know, the big elephants in the room, like the debt, but the day-to-day stuff, you know, if these investments Mr. Trump starts paying off, I don't know who's tracking that stuff. You know, all these, you know, 500 billion from these guys, $500 million from these guys, more billions from these guys. Is there anyone actually following up on that? You know, that's what I'd like to know.
Well, they should be. I mean, it's one of those things. I think we have so many aspects of what's actually happening in the market. So, for example, the idea that the U.S. debt, if it keeps going the way it's going, right, which I expect, you have large institutions who will not stop buying gold and other assets, and that correlates also with Bitcoin, because Bitcoin has now got to the point where everybody believes in it. And because you have everybody who believes in it, it holds value. It's that simple. Okay. If one or two people believe that I'm an idiot, whatever. If you have a few hundred, whatever. But if you have 500 million people saying I'm an idiot, most likely I'm an idiot. Well, you have 500 million people around the world who say Bitcoin is, and they probably do think I'm an idiot. Just throwing that out there, right? So many times I look at myself, and I'm joking, but all jest aside, you have so many people who believe in the value of Bitcoin that if the U.S. debt keeps escalating and Powell holds rates, right, you're going to see more money funnel into the market again, just like what we saw with this week over the weekend. We literally saw a housing issue, or big banks not willing to lend to other big banks because the liquidity was drying up. And instead of seeing a market drop, we saw a market gap up, which is counterintuitive to the actual circumstance. But if you understand that banks and everybody around the world realizes, hey, guess what? The reason why those banks didn't want to loan to each other is because they're loaning in what? USD. or the Fed,
Right.
the Fed coin, which is based off of USD and the backs of the Americans working force. So that idea behind that, that what we're looking at is that the world is in there going, I don't know what's going on. The rich is saying, well, we know that assets is going to keep going up because businesses are one of those things that will keep making money. So we're going to put our money into that. Then in additionally to that, you also have many countries and Federal Reserves and they're saying, well, we can throw money into assets, but honestly, the biggest hedge is gold and silver, and or I think they're buying Bitcoin as well. So that also back end is one of those things that they're also buying, and they can't come out and say, yeah, we endorse Bitcoin. But if they're going to buy Bitcoin, where would they like to buy it? And it's as simple as, do you like to buy it when it's high, or do you like to buy it when it's low? Right?
Buy it when it's low.
Yeah, exactly. So this is where I expect them to want to drop this in market, buying when it's low. I gotta stop doing that craziness. Drop it down at these levels. And then from here, see it then go up, right? And so that's, for me, is one of those I'm looking at. If I am a hedge fund manager, if I am a family boutique fund, if I am a financial advisor, I'm looking at a few things. How do I protect my clients and their wealth, right? And it's not going to be U.S. Treasuries where I make 3-4%. If I'm going to put money in cash, right, and protection and earn some type of yield, I'm going to stable coin, which then will export the U.S. market. The reason why I say stable coin, why, is because I get a higher yield on my cash. You know, it's like corporate debt, right? That you're buying, but it's backed literally by the U.S. Treasuries now.
Right.
So in that same sense, then that gets exported to the rest of the world. So if I'm Powell, I'm like, how do I get people to pay me, and then at the same time not hurt the economy, because they've got to be unbiased on what do they call that? I forget exactly what they call that term. But if they're looking at this market and they're going like, okay, we still want to stay ahead. We still want to be the central bank. But the real question is do we want the USD to stay as strong as we need it to? And I don't think that they have the USD's best interest. And so I think Trump is out there exporting what he's doing. But that's it in a nutshell. I realize I'm being super confusing. My friend, jump in and say what you're going to say, please, because I sound like a crazy guy here. The ramblings of a madman.
Pedro, you know what I'm going to say?
I'm mad?
No, because you can't read the timer, I'm just going to come out and say, have you still not tried 1775 coffee? Now's your shot. The 1775 starter kit just dropped. Only 1,000 units, ladies and gentlemen. You're getting the bold, dark roast that hits hard. You're getting the smooth, medium roast, that's 2. And you're getting the Vitality Mushroom Coffee for clean energy and laser focus. No crash. Get all 3 of those coffees when you order this from 1775 Coffee. They're all single origin, small batch, toxin-free and mold-free. Plus, you're also getting a gold spoon clip because freedom isn't served with plastic, ladies and gentlemen. No plastic. You're also getting a frother strong enough to stir up your coffee and your mother-in-law's opinions. Along with that, you're getting a black 1775 tumbler. $170 worth of coffee and gear, yours for 99 bucks. This is for the ones that have been watching 1775 Coffee blow up right here on Rumble. Right here. Wondering, is it actually worth it? Spoiler. It is worth it. So go to 1775coffee.com/studio and grab your starter kit before they're gone. Bold beans, clean fuel, and morning routine that stands for something just like Rumble does. Ladies and gentlemen, if you're watching this on your big screen TV right over next to me, there's a QR code. Hold your smartphone up there, pop it, and go visit our sponsors. They really appreciate your eyeballs checking out their stuff and the opportunity for them to sell you on how good their stuff is versus the other people's stuff. You should do it. It makes Pedro and I very happy. If you're watching on your cell phone, right there's in the chat section, there's a learn more. And if you're watching on the replay, first of all, thank you very much. 2, in the description and in the comment section down below, there is the link. And also, Thank you to 1775coffee.com for sponsoring this segment of DYOR Live. There we go. Got our monthly ad read in. You're on mute, brother. I put you on mute when you were chugging that water.
Oh, sorry about that. I just saw
it really sounds like you got a giant water bong and you're. That's why I have the Pedro dump button right here. Boink.
Yeah, I get it. I forget. I am not a camera guy, as you can tell. Like,
never seen anyone drink anything out of a bottle like you. Except in a college beer chugging contest. That's the only time I've ever seen.
Dude, it reminds me of when I was in, I don't know if it was my junior year or senior year. But like I said, I was special ed, right? My whole entire high school. Short buses, unite, special ed, let's go, right? Like, and I'm proud of that because honestly, it's just part of my past, right? So I'm like, whatever, I'll embrace it. That's me. And I remember, though, they put me into a mainstream class where there was a bunch of my peers, but, I was taking biology. And but it intrigued my brain. I was so inquisitive that I would keep on asking these questions. And I would read the text and want to understand the text and would drive the teacher mad. But she's a great woman. She was actually really sweet. She was a Christian woman, and she was very kind to me, right? And I remember this. And I remember I had just got done working out of doing something, and I remember rushing into class because I was quite built in high school. And I remember, and I've shown you pictures of me in my, at 18. I look like an amateur bodybuilder, at the age of 18, 19. And so, but I remember I was so thirsty that I ran to grab some water. And that's when the water bottles really started coming out. So they were kind of the hard plastic, not the soft plastic. And so I remember grabbing it and I was so thirsty, bro. I go like this and I literally crunch it. I was like, and she looked at me. She stops teaching in the class and goes, I have never seen anybody devour water like that. And I was like, devour? She goes, that's what you did. You devoured that thing. I go, she's like, if you could have sucked in the plastic bottle, I think you would have. I said, would it have made me hydrated? I obviously didn't start hydrated, right? Because I barely had a vocabulary higher than a sixth grader. But on the same sense, it was still one of those moments that it was like, I still have that drinking style. Let's go.
All right, everybody. There's a whole bunch of you guys watching out there now. I see our account has gone up. Remember, we're an interactive show here, ladies and gentlemen. Ask us questions, chat with us, talk with us. Arcade, it's good to see you again. Really appreciate it. Haven't seen you in a while. Here, coming to us on the Rumble here. Thanks for helping us get over our. I think we're now up to 22 unique chatters. Pedro, last night on the Space Lounge. I'm talking to a very small crowd most of the time. Most of the night there was one other person watching. Yeah. And who was not me, and apparently not you. And then out of the blue, someone by the name of I can't remember what their name is, Kello108, said, "Hey, just stopping by. A great content." Dropped us a $5 donation in the premium time on the Space Lounge.
Oh, wow.
They just cruised by saying, hey, it's supporting you and creators here on Rumble.
Awesome.
And here's a $5 donation. And I was like, and I'd already had 2 glasses of wine by then. So I was like, huh? I was telling baseball stories too. I had stopped the first hour. I had talked about crypto and Bitcoin and all that. In the second half hour, I just talked Blue Jays and Cubs baseball and stuff like that, and just letting the clock tick on the premium hours. And then all of a sudden, this guy rolls up, or girl, I don't know what it was or what they were, and drops us $5 whole bucks. It could have been Immaculate Conception there. It could have been the Rumble gods coming in and just spreading the love. But anyway, it was a Good time. It got to a point last night. It was about, I don't know, it was about 12 o'clock or something like that. And I realized my mouth was not moving as well anymore. And I'm like, okay, time to go. Time to go. The Blue Jays game is over. I already talked about it. Watched the replays. Watched the highlights. Went through everything. I'm like, it's time to go. Time to go.
Got it. Yeah.
Higher Chicken says, Pedro turns it up. Turns it up, ladies and gentlemen.
Turns it up. Let's go special ed. All right. So I think one of the things I do appreciate everybody. First of all, thanks for coming. I see a big jump in our stuff. So thank you so much. I think one of the things I think it's important to understand is as the Fed is starting to come out, we've got a few minutes before they actually come out. I believe, we got one more hour.
Yeah, I got another hour. 63 minutes.
So I think what's really important to understand here, when these numbers come out, I'm expecting to see again either a hold or a potential even increase. And I know this is going to sound counterintuitive, and the reason why I'm playing this is because how I'm seeing the markets play out right now, right? Like they dropped it in the S&P 500 as I'm looking at right now. It's funny is you know me, my first target is always quick, right? I want my money, I get out, or I don't get out, but I keep my money, and then I want to see it running, and it just came back to my entry point on the S&P. I'm getting out right now. It looks like they dropped it, the S&P 500 down, and we're seeing it go up. And I think it's what's really important to pay attention to is that as I'm looking at it go up, I'm expecting it now for them to drop the S&P 500. They're keeping Bitcoin right now at these lows. And so that means this is that if they keep rates, right, from going down, that is a bearish sign in the market. Even if they do not raise rates, they keep rates the way they are, it's going to be a bearish sign. So we should see the market sell off in the same sense because they're kind of playing here with people's emotions. And
Pedro, I've got the S&P mini chart up here.
Yeah. Okay.
And it's the hourly chart here, and it looks like it's just come down below the 21 period moving average. Were you looking for it to come down and buy as it pops back up, or are you looking to sell it and short this thing?
I'm looking to sell this and short it. So I don't think they're going to lower rates. We talked about yesterday that the market was, when you look at yields, right? If we're looking at like short-term yields, they started selling off the short-term yields, right? Like the 1 month, 2 month, like we can sit there and see it. And like you can see here, or since last week, they started selling off, right? On the 20th, expecting a sell-off. So we are seeing short-term yield drop here. We have the 3 month, right? Same thing. 6 months, same thing, just selling off, right? Since last week. So so those people who are saying that, where do you get that from? And I know it sounds crazy because a huge bet on the market's that they're going to drop rates here. Now, short term, I acknowledge that 100%. Okay. But when you look at the 2-year yield, right? We're watching it kind of move up here. So this is where I'm looking at the 2-year, the 5-year, and the 10-year here going like, okay, guys, what are you doing here? And they didn't bet against it going short. Like if you look right here, they didn't really bet on them dropping this rates. So they're kind of playing. They got kind of screwed over by the Fed a couple times now. So I think they're waiting and seeing in that same sense. On the back end, when you look at what's happening with bonds have a similar picture here. Right? When you look at this, like bonds are kind of going down. You would expect if they're going to lower interest rates, bonds to go up, but we're watching bonds go down. Look at the 10-year. Look at your 2-year bond. They're kind of going down. So it's like, we're going to wait. Traders do not necessarily know. So on the back end, that's why I think if they are going to hold rate, and if it was leaked out, right, then it would be leaked out that the market is, if they're going to lower rates, they would want to short interest rates, and then bonds you would go long. Okay, because that interest rates are going to drop, so you want to short that in advance so you can sell off even more and capture bigger profits. We're not seeing that, and so this is why I think they're going to hold rates. And I think maybe one of those Fed people have got a massive bet on the other end because they've literally got a almost 10 to 1, 15 to 1 ratio going on there over at Poly Market. So I'm just saying, it's interesting. It's really interesting. And I know I'm counter culture here in this aspect. I get it. We got 20 people watching us. It is dope. And I don't want to sit there and make you think that I'm a nut here. But I'm looking how a trader would trade this and see it. And I may be a nut, okay? Most traders are. I mean, go watch them. Go watch the show. It was actually a documentary called Floored over on YouTube. Those guys were nuts. Old Chicago Board of Trade, open outcry traders, right? But still, like, they know. Anyways, I don't need to justify myself. Just saying that I do see the market a little bit different. And so,
all right, ladies and gentlemen, it's the top of the hour here. It's 1 o'clock Eastern time here. 1 hour from the Federal Open Market Committee rate change. As we said, we're talking about it. The whole market's saying it's going to go down, going to dropped by a quarter point. It's going to be dropped potentially by a half point. Pedro's on record as saying, I think they're going to hold it. It's better for the economy if they do that. We shall see. We shall see 60 whole minutes from now what's going to happen. But Pedro, I was just mentioning, hey, where are our other European viewers? Haven't seen them in a while because the time change. I think the time change is suddenly brought, I'm pretty sure Chris, Extreme Car Care is from Manchester. And it's Chris, right? He says, sell everything. Sell everything. No, only joking. But he says, hey, you guys, how you doing? Good to see you again, Chris. Which I believe I'm correct in your name. It's been a while, as they say. But thanks for joining us. If you wouldn't mind typing in what brought you back here. Did you see our post somewhere, or did you just say, hey, I'm home at a time now that allows me to watch them? What happened there? Fire Chicken says, will this be Pedro's biggest call of all time? Oh my God. We're going to be running, I'm going to make 50,000 shorts of this if you...
Oh, no.
If they hold it, I'm going to be like, boop, 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 boop. Short.
Don't, guys, don't do that. I hate this stuff. But, I mean, and the only reason why I use these opportunities, because the key is like, if I see Bitcoin, because I like to warn people, look, buyers are coming.
Pedro Damas.
Okay, I just threw it in my mouth a little, bro. Like, don't. All right, let's not. But this is the part that I want to bring up. I think it's so important to understand this, is that, like, do you remember at the beginning, I think it was about 2 years ago during Christmas time, I came on the breakfast. It was, at the time it changed, but you had all these influencers and this guy was running it. And so Bitcoin was sitting around that, 70,000. It hit that 70,000 mark, and people were like, oh, this thing's going to 100. I said, I hate to tell you guys, but this thing's going down. And people were like, and me and Tom were still kind of small. And so they were like, who's this guy? And I said, well, look, if you look at the hour chart and you look at your 2 hour chart, you see how it keeps trying to go up there, and then it keeps selling off, and you see those big old wicks. This big wicks are, this is at the top where you have retail buying and the institution absorbing them.
Right.
And so this is a huge indication of, hey, guess what? This is going to sell off, because those type of absorptions, if you see a bunch of sell wicks at high points, you need a lot of money in your account to be able to absorb that. And retail retail traders cannot absorb those buys from institutional buys. But it's only the opposite way around. It's like a bigger glove trying to fight a smaller glove. It just ain't gonna happen. They're gonna get every time eaten, right? It's like the bigger, like Pac-Man. Anyways, so the reason why I say this is this. On the back end, when I was watching that, I said, guys, this thing's going down from 70 back down to like 50, potentially 40. And, and they called me idiot and dumb and you don't know what you're talking about. And I said, all right, well, I'll come back in about a week and a half, 2 weeks. And then sure enough, boom, we saw it came back. And I said, all right, guys, now we're down at these levels. And I said, and guys, you got lucky. And I said, all right, well, we're at the low point here. I'm seeing the opposite situation happen. Retailers are selling off and institutions are buying. We're going to see it go up. From here, they're like, well, how high? And I said, probably to 70,000, 70 to 80,000. But I would guess that that's going to be the area. And then we're going to see it most likely sell off again. And it's exactly what happened. So I think I did that like 3 or 4 times. And then at that point, when I would come in, I'd be like, all right, guys, the markets, we should see it continue, but we're going to be basing in this level here. And that's what we saw, between until Trump and Biden switched office. We saw that, just that consolidation. And we talked a lot about that on our show. And then we talked about the Trumpian plays of like the US dollar going from 109 down to 100 to literally, and you can look at our Trumpian trades on the, we've got a lot of guys here watching, but if you go back to our inauguration show, I give literally 10 trades from crude oil to Bitcoin to Solana to all the other major coins out there. And I simply, as well as major indications like the S&P 500 going from where it was down to a pretty low area, talking about the NASDAQ, also talking about bonds being up at where it was, dropping back down and seeing it climb all the way up to a high level, talking about interest rates. At the same time, also talked about gold. At the time, it was 2,100 or something like that. And I said, I expect to see it hit at 3,400, and boom, we got there. And then I said, now I got to revise that because it's continuing up. There was a lot of plays that we've given people. All that to say this, I want you guys to make money, right? Like, that's real. And I'm really giving free trades away for you guys so that you can take advantage of these trades for yourself. Again, I'm not a financial advisor, but these are things that I'm looking to do, and I'm giving that to you guys, right? From more of an institutional view of how to trade. And so I want to, we've got a lot of viewers here today, and I appreciate every one of you guys. And I want you to understand, like, my goal is to help you guys out and make it entertaining. So if I sound like an idiot, I might be, but at least I know the potentially where the markets are going potentially. So, anyways, my other part I want to bring up, and I thought was really interesting as well, is the whole entire situation with Xi Jinping and Trump meeting. Because I think that's going to be a really, like, their actual meeting. And I think that's going to be a huge dynamic. And I think this interest rate situation very much could be the tone of what actually happens there at the meeting. What do you think? What are your thoughts on what's actually happening in relationship to Trump and Xi Jinping? And like America's debt just being exported throughout the whole entire world.
I made the thumbnail today here at FOMC Day, but I had Jerome standing in the middle of President Xi and President Trump, and you tried really hard not to just slam that thing, didn't
It was so. Bro, I'm trying, man. I don't want to look like.
You need a straw, little thin straw to just.
I hate straws, bro. They actually affect my nasal system.
Oh.
I'm serious, because
that's one of the best. Anyway, I think it's all interrelated. One of the things that we need to see to keep rates coming down is all this foreign investment coming to the U.S. and spurring the economy, that type of stuff. Today, is in advance of the Open Market Committee meeting and in advance of Trump meeting President Xi, President Xi said, we're going to go ahead and buy that $180 billion of soybeans, put in an order for that. And they haven't ordered any in a long time because they've been not liking what Mr. Trump's been doing. And that's a lot of money for our farmers. It's a lot of money for the soybean market. You probably saw the soybean market. Maybe the soybean market anticipated this because they've got spies all over the world. Yeah, right. But yeah. Maybe it wasn't a big shock to the market. But that's a lot of cash coming in that goes directly to farmers. I mean, the soybeans are sold, from farmer to their local co-op who sells it without a profit, just for everyone in the community in that co-op, to exporters, to either the food companies directly or to exporters. And those exporters are sitting there with cash saying, hey, we got China putting in the orders. We've got letters of credit in place for all of this. That cash will come into the United States faster than anything else. It will come faster than money building factories, manufacturing, all that type of stuff. So it's a big thing, and it's one of those things that you've been harping on about, hey, we need to see that investment now for this to work. And so inadvertently, or maybe advertently, I don't know what the right word is there, President Xi is helping the Fed do its job by spurring the U.S. economy along. And if the U.S. economy is spurred along nicely, especially from the farmers go out and they buy, farmers don't fuck around with their money. They go, as soon as they get paid for stuff, they buy new equipment, they buy the new seeds, they invest in their business. They're not out there going to Ibiza for hookers and booze, you know. They invest in their business to get more yield out of what they own, out of the land they own. Yeah. And they do it quickly. Farming isn't just like, well, we'll crank up the manufacturing line when we get new investment. You know, farming is, we've got 6 months to do this, and we got to do it right. And next year we're going to do it better. And so I see it all as being very linked. And the story is linked. The actions are linked. It's a big deal, and that's why I thought that was a good topic of the day for President Xi. But this is what I want to know: that you maybe perhaps a Chinese immigrant can get on this call somewhere and talk to us. When they don't buy soybeans are like, when you go through the ingredients list in food, a lot of it, you know, is different names for soybean, goo, muck, mixed in with soy, you know, all this type of stuff. It's a big thing for the food, feeding other animals and feeding humans. What are the poor Chinese doing when they don't buy soybeans? They don't grow enough of them in China. They can't just go somewhere else and buy them. The United States is the largest soybean producer in the world. They just go to the shelves and go, president didn't like the U.S. politics, so everyone in China starves or doesn't get decent food?
That's the issue.
I don't understand that. When you play politics with food, you know, you can say, well, we're just not going to buy from your farmers. And then in Canada, they say, oh, we're not going to buy your canola oil. And everyone freaks out. What are the people in China doing? Say, you know, guys, we need that. You know, we got stomachs, we got kids, we need the food.
Yeah, that's been the biggest issue, is that Xi Jinping.
Say President Xi.
President Xi Jinping, thank you. Xi Jinping has been one of those. He has sat there and he's fought with this idea of, do I feed my people? I mean, we forget Mao starved almost half his population to death. I mean, it was no joke. He did not care. That's a
good point.
Yeah, so it's like one of those things in relationship to which one is better for the country at large and for the long term. And so obviously his system is planning where it's somehow him buying from America here. It's got to be long-term potential. I know that we have a ad coming in. Let's go ahead and read that and then we can give it to you.
All right, let's look for the sports ones. They're the best ones. Who are these guys?
I know a lot of people are gonna hate on me, but let's go Raiders.
There's no football you bad stuff going on here. Hold on, I need to refresh this, unfortunately. Let's see, who do we get here? Who's got the most money for us? Let's go with, we're gonna go with Augusta Gold. All right, ladies and gentlemen, it's time to talk about your retirement, your future, and what's going on. As you all know, Pedro and I talk about where money is going, how it's deflating, all that type of stuff. We talk about it pretty extensively. But did you know the biggest threat to your retirement is not something that's talked about? We talk about it a little bit here, but not enough. Our increased longevity in America means that the default retirement accounts like IRAs, 401ks, TSPs, in Canada, the RSSPs, they might not suffice. If you have over $100,000 in your retirement account, get instant access to a free 2-minute report from Augusta Precious Metals that reveals the one step you can take to secure your financial future. Text SAFE, S-A-F-E, to 35052 today. Once again, that is text SAFE, S-A-F-E, to 35052 today, and you can take a step to secure your future. Now, Pedro and I talk about precious metals all the time, and what a good idea it is to have some exposure to precious metals in your portfolio, whether you're a day trader or a long-term holder, doesn't matter. But anyway, over on that side of the screen, ladies and gentlemen, there is a QR code code from Augusta Gold. You can click that and it gives you instructions on what to do, or just grab your cell phone and enter the word SAFE and type in the number 35052. Yes, it's a short code. You may incur costs from using it, but type the word SAFE, S-A-F-E, and you will learn all about investing in gold and precious metals and how to protect yourself from inflation. Thank you to Augusta Gold and Augusta Precious Metals for sponsoring this segment of DYOR Live. Alrighty. Thanks everyone for sticking by there. We've got a bunch of viewers. We actually had more people watching us on X today. Thanks to everyone that joined us on X at some point or another. Keep those eyeballs on X. Open that X feed up into another browser and let it run. All it takes, Pedro, on X is like a couple of people just to watch for more than 10 seconds. And they start boosting that thing up in the...
What's up? I did not know that. That is actually really cool. Can you hear me?
Realized yes, I can hear you. Yep. I forgot where we left off here. Oh, you know what I wanted to bring up before we go back into stay a little bit on international politics here. Let's get over to the main screen here. Not the main screen, the chart screen here. Pedro, I don't know if you've noticed, but there, besides what we talk about here and just worrying about the debt, there's an international murmur about the U.S. economy, the U.S. dollar, all this type of stuff. And you see a lot of the troll accounts on X. A lot of the big kind of foreign influencers keep repeating this.
Narrative.
Yeah, the narrative that at any moment the U.S. dollar can implode, things like that. And in fact, a couple of years ago, I think it was 2 years ago, the president of Kenya famously stood up in public and said, "Sell all your dollars now. Get out of the dollar. At any day, it's going to crash." And big news is coming out of the U.S. like tomorrow. And you and I were like, "What?" I mean, we know we have long-term problems that can degrade us, but not like. Because then the world will come to a halt. And it turns out that was at the time of the African summit that Russia kind of bankrolls and gets the leaders in Russia that favor leaders in Africa that favor Russia together. And that is happening again right now. That is happening again right now. And we had this time the victim. Hold on, here it is. Do I have that on the screen here?
All I see is your chart, and it looks like the S&P 500, I believe, and that's okay. My chart, Bitcoin.
I don't know why it's that chart.
It's 2-year.
Oh, I got the wrong browser up here. We got the president of Eritrea took the lead as the foil or the mark, or whatever you want to say, to repeat the
narrative.
The same narrative. And here in this, should be right here somewhere. Here in this tweet, we have President Putin here talking about mentioning America, and then immediately, see, he grimaces a little. Immediately, the president of Eritrea, who is right here, comes in and starts talking about the United States doing nothing. In fact, he says, they are printing money. They are not manufacturing anything at all. This has been one of their global weapons, the monetary system. We need a new financial architecture globally, not controlled by the dollar. And look at this guy, I can't remember his name, but I just call him Herman Munster. Is like, yes, we definitely need that. The president of Eritrea literally came out and said the U.S. doesn't manufacture anything. I said, all right. First of all, we know that's not true.
Yeah, we're one of the biggest manufacturers in the world.
We manufacture, the United States manufactures almost $3 trillion of goods a year. And everyone says, oh, the U.S. is, got smoked by China. China is only just over 4 billion.
4 trillion.
4 trillion in manufactured goods, like 4.5 or something like that. Whatever it is exactly, I don't care. But it's not like the U.S. is manufacturing output ever went down. We lost a lot of jobs, but our manufacturing output didn't go down, and it just didn't go up as much as it should have in this manufacturing boom in the last 100 years, or the last 50 years, because the less expensive nations took a lot of that business for obvious reasons. They're less expensive.
And it has
but
to
the
do
fact
with
that they're pushing this narrative up there and getting these African leaders. And by the way, you haven't heard anything out of the Kenyan leader since he said that. Because first of all, what he said, the Americans just went up to him and said, okay, first of all, that was BS. And two, we've got the bank number here where the Russians paid you to say that. Would you like us to release that out there, or would you like that to go away? And he's like, we'll never mention that again, sir. And said, thank you very much, boss. And that's happening right now with the E-Tran thing. Right. And people need to remember that. And all this gloom and doom we talk about in the U.S. Oh, the president this, president that, policies this, policies that. We're still the second largest manufacturer of stuff in the world. And with just a little bit of effort, with Mr. Trump's, policies bringing manufacturing back to the U.S., we can be number one again, even if we're a lot more expensive than making things in China. One of the reasons why we're close to the market. The market's here. It's not in China. They have to ship all that stuff. There's boatfuls full of fake doggy poo and all your Canadian Tire and Lowe's and Walmart crap coming over here all the time. You know what? Make that stuff in China. I don't care. Make that stuff all in China. But all the steel and stuff, bring the steel manufacturing back here. I mean, it's nice having the dirty stuff over there and someone let them wreck their country. But now we know how to make clean steel. We can actually burn coal cleanly now and that type of stuff. We can do all these things without endangering the planet. Or the neighborhoods around us anymore. Yeah, we figured that out. And so the narrative for all of you watching out there, I know I've been going on about this a lot, but it really bugs me when the world gangs up on us and they're just wrong.
Yes, and I think also to add this, listen, they are producing 33% more than what we are. I want to make sure you add that's a lot. That is a lot of production. And now, very rarely do I give the CCP credit for anything, but for that one aspect that they were able to garner, I think the most important thing really to pay attention to is that they are a manufacturing juggernaut, and they have a lot of smart people. The Chinese people are brilliant and hardworking. So I am not going to take that away from them, because on that aspect, America needs to step that up. The American culture has been lazy in this aspect of we need to go to school, that meaning hardworking, we need more engineers, we need more rocket scientists, we need more real education, not fake liberal arts led education that literally, if you have a liberal arts education, you may produce something, but when I look at the GDP of America, which actually adds more to the GDP and your children's prosperity, it comes down to those STEM education. And
right.
We need to see more women. We need to see more men in those that are literally Americans in that push. And so, if we see more of that, then we will see that 33% here in America climb, because one, your mindset expands, and also your work ethic, because you have to work really hard, increases. And so as your mindset expands and you have more new ideas and more things you can do and build, and you have that work ethic that kicks in, guess what? All of a sudden, it goes from 33% down to 22%, because America's taking up that niche that needs to happen. And so all that to say is, I don't disagree. You're right. They talk trash, and America produces, like you said, we're the second largest manufacturing system in the world. But it's not going to be overnight, though. We need real engineers here to step up. We need people to take on the horn of the bull and really start to fight that. I don't think it's just like what you're saying. It's simple. It's not. It's a hard thing.
One of the best things to take away from these people complaining about it is that the whole rest of the world doesn't add up. Like all of these BRICS nations or African nations are like, we need something new that's not based on the dollar. Okay, you want something that's illiquid, not easily convertible. No risk manager will bet their job or their company on using that currency. Okay, you can have something different. Or you can have the US dollar, which everyone accepts, which you can borrow as much as you want from anywhere you want in the world. And you can buy $1 trillion in oil, or you can buy, containers full of fake dog poo from Hong Kong. And you could do anything you want with it. And the fact that people say we need something different, they need something different because they're tired of getting their corruption rooted out. That's what the problem is. And so they would love a BRICS currency that nobody really cares about money laundering and that type of stuff. They're like, well, we'll just let regular law enforcement handle it. But you guys control the law enforcement. Yeah. That's besides the point. But anyway, ladies and gentlemen, as they say, welcome to the show where you learn about everything here, even lots of Tom and Pedro's opinions about how the world should work. Like, if we were king, this is what would happen,
Well, but the thing is I also live in the reality of how things work. Like that, the market is always right. The market is always right. Regardless of your fanciful ideas, like I said, the market is betting that most likely we're going to see a stable market. We're going to see they're going to hold interest rates, right? Because that looks like what the market is suggesting here, right? Either hold or I don't even dare I say go up, but the way they're playing this market and the way money is putting it, you put your money at risk and then you got to sit there and make it. So it's just not fanciful ideas. We discuss things and we predict a lot of things here in relationship. I mean, we predicted the stable coin act and what's actually going to happen before it was even talked about a year prior. Right before it was even thought of, because the Biden administration was even remotely. And I said, they've got to go there because the way the real world will have to work. We talk about debt here, the U.S. debt and the collateralization of Bitcoin, right? That idea that Bitcoin will become the underlying asset value. And I know people don't want to hear that, especially if they have a lot of money in TradFi. But the reality is this, is when I think about crypto being the underlying asset, that's any major crypto that has a lot of business and a lot of transactions going on between. So whether that might be a Solana treasury, Bitcoin treasury, ETH treasury, a Crow treasury, it looks like also pumping H&T. H&T might become a treasury because of the reality behind it, what's actually happening here. So I think it's important to understand that it's just us, not just they're going blah blah blah. I mean, it's real, right?
HNT. We talked about HNT yesterday, and they've continued their run down since yesterday.
Yeah. I was like, man, I didn't get enough, so that's why I was.
No, but I'm guessing that they're suffering from the same Bitcoin the sell-off today. People are basket selling off. Pedro, I'm reading more. There are more and more crypto baskets starting to be traded. You see our new one introduced every day. Like they put press releases out like it's the most genius thing ever. We're gonna have a crypto index. You know what? Like most of the wallets now can have a crypto index, and you can just hit one button and trade a whole bunch of things. Not that big of a deal. The problem is that they're putting a lot of money in these things, so you're gonna see more linkage between everything. Because once all these people once more people start trading baskets, then you might as well just consolidate everything into Bitcoin and just be done with everything else.
Well, I think the thing is, when you look at them, many of those baskets are over leveraged Bitcoin, right? Like we don't see an equal leveraging or an equal distribution of funds throughout everything, right? It's much more leveraged towards Bitcoin. And the truth is I think that's kind of what it should be. I mean, I know it sounds crazy, and it's probably what's holding on to a lot of the altcoins, but sooner or later, just like we see pumps happen in the stock market with stocks, you'll always have the pink sale market, that market where it's like you can see money come in, right? And and then run up something. So I don't think you'll ever have anything that will ever go away. But on the back end, you should expect these things to happen, because as we see the bundle markets kick in, right, that allows, like I talked about the small boutique family office that I was talking to at that festival, saying, hey, you need to pay attention, understand what's going on with the Stablecoin Act, or you need to read through it and understand what's happening with stablecoins. And literally, it's just like buying treasuries, but you get a higher yield. I mean, if I were you, that's where I would be putting my, you know, I hate to say it, but if you have anybody in cash, and let's say they're above age 65, you can get them an 8% yield, 7% yield on their money, and they're basically backed by treasuries. So why wouldn't you do it? And that blew their mind. They're like, wait, what? And I said, go look at this. It's as simple as, like, go read the law. You should have been reading the law here. And then in addition to that, once they start coming out with the collateralized debt income products, right, based off of Bitcoin, because this is what we're talking about, the collateralization of Bitcoin and many other coins that could be used as treasuries. These will then have, I personally think that those are going to also be tied to a high yield corporate AAA bond. Because again, you're able to collateralize a system that has current, not just stability of income coming in, but then you also have it decentralized and allow it to spread around the world. And all of a sudden you can see something create a meme coin effect where you can see money come up and come back down. And that's going to have huge implications on the income coming into that debt instrument. And again, this is stuff that's going to most likely happen in the next 3 years, 2-3 years, that we see. I thought the income, or I thought the stable coin situation was going to happen. You know, I think I said 4 years to 6 years out during that during those episodes. Obviously, it happened much quicker. It was 2 to 3 years. But I also threw out, if Trump gets in, it would expedite that time frame. So it's an interesting thing.
All right, Pedro. It's the bottom of the hour here. It's 1:30 Eastern time. Half hour to the Fed releases its numbers on what's going to happen. You're watching DYOR Live here on the DYOR Media Network. Thanks for everyone joining in here. The market is reacting kind of mixed lately, not doing much right now. The S&P is only up 8 points. NASDAQ up 70. Dow up 171. Even the top stocks, Apple, Tesla, and Netflix, are really unchanged. Gold down 40. And then Bitcoin is the outlier here, tanking a lot and bringing much of the crypto market down with it. A lot of traders play this day today, so a lot of market market makers are moving the markets today, trying to essentially take all of your liquidity in one quick move here today, waiting for you to make that mistake and place a trade right next to when Mr. Powell speaks. They'll get you. They'll pump it down, then they'll pump it up. Whether you went short or long, they'll stop you out. You can trade today, but be careful. Be careful. Anyway, Fire Chicken says, did we find the daily bottom? Who knows? We got to wait to see what Mr. Powell says.
Yeah, I was going to say, depends on what they say. So yes, I am monitoring that, as to quote, I'm monitoring the situation as
Pedro's we're in the situation room right now. That's where we are right now. And we're getting the situation from Jersey Shore coming on. Right. No, it's because
that's what it was. Yeah, around the same time. Did you remember Boiler Room? That was such a crazy movie. I actually want to go watch that again.
Pedro, I used to have Boiler Room guys call me, because when I had my armored vehicle company in Chicago, I got listed as the CEO of a big manufacturing company. And so they would call all the time. And I would say, look, man, I am a startup business. I've put every dollar I own in this. I don't have even 5 cents. In fact, the only $3,000 I had extra was the money that I had mentioned that my son said you should buy Bitcoin with that when it was at $13 or $76 or whatever. And I didn't, because it was too risky. And and I had these guys call me. I had the incessant, and I told the girl that was our receptionist, I'm like, trying to get rid of them, but if they're pushy, just put them through to me. I can speak their language. Finally, this one guy calls me. This one guy gets me, and I was like, yeah. And he's like, I've got it. I've got what, this kind of stuff. You're a rich guy, blah blah blah. He didn't say it like that, but he implied it. I'm like, yeah, okay, I'm not. And I said, you know what? I've pushed off all of these guys. I'm just gonna see, and I know what they do. I'm gonna push them all off. And then, but this guy, I sent this guy $2,000. I said, all right, I'm gonna do this. Oh, no. So I sent him $2,000. He's like, you can just see him in the room. He's like, yes. Sure, I can't remember the stock, but it was a Pink Sheets stock. It was a pump and dumper of some sort. Something pharmaceuticals. I remember it now. Something pharmaceuticals. Coming out with something. And I was like, all right, let's give it a go. So it immediately pumps. I call him up. I say, I want my money. And he's like, oh wait, we just got started. I mean, it's only been 3 weeks. Of course, immediately pumped. I said, I want my money. I said, I've got some investments I need to make at work, and I need that to do it. And he fought me for a good 2 or 3 days. Finally, I told him, I said, my next call is to FINRA. All right. And so either you process my check right now and send it to me, or I call them. 2 days later, I had a FedEx with the check. All right.
Yeah. Dude, you clubbed out. You came out.
I made $1,500 from a boiler room, and they're still probably telling that story. That motherfucker got us. That guy back in 2012. Fuck him. Fuck him. I didn't get any calls after that. They must have a list like this guy got us, and so they shared it amongst everybody. It was it was awesome. Chuck says he's out of his short minutes ago. All right, that's a good plan, Chuck. Good plan to be out of the Bitcoin market here, and take your monies and run, as they say. Let's get back to the BTC.
BTC market here going on. So we're pulling up here. They're actually pushing it up here on BTC. I'm expecting them now. Again, they could shoot it back up into that 112 area, that they came from at the beginning of the morning open as they sold off. This is a telltale sign for BTC that when they sell something off in the morning, expect it to go off. And we've been seeing a sell off over the last few days. So that's why I'm more bullish on BTC now versus bullish or wanting to short the S&P 500, right? Because they're drastically pointing, hey, we're selling the market off. Now, again, we're at two junctional points. We're at that daily 8 and 20 SMA. We talked about this area here holding, right, yesterday. I'm more apt to think that they might purposely try to sell it off even further down to that 200 period sitting right here. Okay, why isn't this? Oh, because it's bit stamped, that's why. All right, it's like, where are my lines?
Where are my lines? Chuck was out 35 minutes ago. That was a good time to get out before it started heading back up. Perhaps, Chuck, you did catch the bottom. At least you caught the bottom of that local cycle. Maybe not the whole daily cycle, but at least the pre-Fed cycle, you caught the low.
Nice, dog. I love it. I love it that you made that profit there.
Meanwhile, there's 10 sick patients in rooms down the hall from them all sitting there like... And Chuck's in here like, sell, buy. What are Pedro and Tom doing? Doc, the guy in the end's bleeding out. That's all right. He lived a full life anyway. He's only 13. It's good.
It's horrible. Lord forgive us. Okay, so right now as I'm monitoring the situation with the S&P 500, we're watching it kind of come back down here the last hour. So we saw it go up this past week, or excuse me, not this past week, this past hour. Saw it shoot up, came back down. We're kind of in this idiot box here, which I love how Tom has coined that, and it's a brilliant coin. Call it right here. Nice little idiot box.
Yeah, look at that. So if it just bounces and trades back up, it'll stay in that consolidation idiot box.
Yeah.
Just for those of you who know, I call it that. I learned that from a guy named Master Friend, and he one of his videos. He talks about it, and it's just if you trade in that box, you're an idiot because it's gonna just go up and down, and you're going to get stopped out over and over and over and over again. You got to wait for it to break out of the box. Obviously, there's short-term scalps in there. That's different.
Yeah, it's different. It's a different. And I'm not much into scalping. I like the market to tell me which direction it wants to go, and then take part in it, right? And so that's where I'm more apt to.
That's what I like too. But scalping, I get stopped out just like endlessly, and just then you get stopped out, and then it goes up, and you're right. If you didn't get stopped out, if you didn't use a stop order, you would have made money. But then if you didn't use a stop order, you would have lost your shirt. It's he's trying, ladies and gentlemen. Look at the success.
Hey, there we go. Let's go.
Chuck says bottom-ish. I got above the 1 minute 21 period, so got out. Yep. Good play there, sir. Good play.
Well done. Well done.
Well played, sir. Well played.
I'll be your huckleberry. I'm your That's what he says. I'm your huckleberry. Nah, I'm your huckleberry. Boom, boom. If anybody doesn't know what that's from, it's from Tombstone with Val Kilmer. I think that was one of his best when he was Doc Holliday.
Yeah, I need to watch that again. It's been a long time since I've
Such
seen
a
that
good
movie.
show. It was with the why am I what they called Cisco Kid. The whole entire
When did that movie come out? Was it like the late 90s or something? Or
no. It was mid 90s. I want to say mid 90s. It was such a good movie. If you guys haven't seen that movie, it's called Tombstone, and such a good show. It was with what's his name? He was the guy who played Dances with Wolves. Sean Connery is not his name. Why am I forgetting what his name is? I am the last one. Sorry, it was Dragonheart. Why am I forgetting the guy's name? He also played Waterworld.
Kevin Costner?
Kevin Costner. Yeah, Kevin Costner was the sheriff for
Yellowstone? Yellow something?
Yeah, let me
1993 that movie was released.
Yeah, it was like 95, 93.
Started along with Kurt Russell portraying Wyatt Earp. Man. Yeah,
Was it Kurt Russell? Was it Kurt? Who were they? Maybe I'm wrong. It might have been Kurt.
No, Val was Doc Holliday. Kurt was Wyatt Earp.
Yeah, you're right. That's what it was. It wasn't, you're right. It was Kurt Russell.
Ooh, even Powers Booth was in there. I like Powers Booth.
Yeah, it's such a good movie, dude. Such a freaking good movie. I don't know why I was thinking Kevin Costner. Yeah, but it was Kurt Russell. Yeah. And I loved his love interest. She is such a good actress. I freaking love her. Like.
All right, ladies and gentlemen, it's got 15 minutes or so left in the show here. We'll probably stay on just a little bit past 2 to see the shenanigans of the market here, especially the 1 minute chart. See what it does on the S&P 500 and and Bitcoin. So if you've got any questions, let us know. Oh, excuse me there. Still a bunch of you watching. Had a good.
Great show.
I had 21 people watching us on an X at one point or another. Thank you very much for that.
Every one of you guys, thank you.
The Facebooker people showed up, all one of you. Thank you very much. and the YouTube, man, I just can't believe, Pedro, that the show that we do here, one show we got 500 people watching us on YouTube, and now today there's one.
Yeah, well,
one.
And shout out to that one Extreme Car.
Right,
Care.
whoever you are, thank you very much. Oh yeah, Extreme Car Care was watching.
Yeah,
Draco hasn't showed up yet. I think there's an Infineon thing going on right now.
Yeah, but all our guys who watch us over at Premium, or I'm not Premium, but YouTube, I think appreciate every one of you guys as well. Don't matter if it's 1 or if it's 100. We love all our people. So Shout out to every one of you guys. I think what's interesting here also is the fact that we're actually watching, and I think this is a telltale sign of potentially where what is actually happening. XRP is actually going up, and we know how connected they are to the Fed. So like, just sit there and watch that XRP is moving up, right? And Bitcoin is dropping, as well as like Ethereum is kind of moving up. Shows me more of like, like that they're kind of in bed with the. Maybe I'm wrong, and and the fact is that it will benefit them if the market stays stagnant. If the market goes down, well, it makes it more easier to move the market. If the market goes down, money gets easier. You don't necessarily need crypto, right, per se. Now, because of the debt situation, I think you always need crypto because you need another asset apart from that's outside the system. In the same sense, also watching the fact that if you are going to keep rates the way it is, you need to kind of see kind of a downfall of America, and if you can create a CBD central bank digital currency, CBDC. That was so hard. Sometimes my brain is like, it's like I'm already over here, but then my brain forgets like these little things.
It's still trying to contemplate how to drink water. You're like, wait a minute, that didn't work right. You reset your whole brain.
Yeah, whatever. Yeah. I'm special ed. Let's go. Special ed, unite, short buses. Let's go.
Fire chicken coming to us from X. Thank you very much.
Oh, it is good. It is good. Let's go ahead though. Watching this system here is just, I'm so mad. I'm mad that I didn't take part in XRP, because we were talking about XRP when it was at the 30-cent mark, right down at around these levels, 27 mark area here, and watching at those levels, we could have bought in, even if I threw in, like $500 to $1,000 off of that level. It just makes sense, right? Even at like that 31 cent, I mean, that would have been a 10x. And I'm mad at myself. I'm mad that I didn't wake up until now, or over a few months ago. But in that same sense, we're talking that could have been a 12x. That's just money in your pocket that I just gave up. So we'll see what happens here. But the fact is that they're staying above the 8-period moving average. They're not seeing a red day. It just doesn't bode well for me. I can't trust them now. It's hard for me. It's hard, man. It's hard in these streets.
Smalls.
All right. Boom. Let's check out Doge while we're cruising through. Oh, sorry. Side note, Squirrel. So the U.S. Treasury Secretary Bessent says, and I thought this was really interesting. This was a couple days ago. It says that China is ready to make a trade deal, which would remove President Trump's 100% tariffs. I thought that was so interesting. That like he's even part of the dig. You know what I'm saying? He's a brilliant man. And so like the fact that he has so much power now, and the fact that he was one of the primary guys who really suggested that we go into Argentina and help support them and to help push out, honestly, China's influence as well as the IMF influence within Argentina. So the fact is that he goes in and he offers, President Trump went in, but I think obviously, Bessent said, hey, you should probably take care of this because this is in our best interest here. And I was listening to Tom Bailu's interaction with Peter Swift. He did a deep dive in talking with him, and Peter Swift talks about literally the idea. It goes over the whole entire history of, and I think everybody should watch that. Go and watch it. It's Peter Swift. I always mess his name up. Second, but there's this interview that basically happens, and And I think what's interesting is this guy. Oh, bro,
Cletus, I love Cletus.
Yeah,
I love
I started
Cletus.
watching him, bro. He's so dope. You're right. Let me go into.
My kids have gotten me Cletus merch, so I have Cletus t-shirts.
So good. He's really funny. He's a funny guy. Here it is. This is it right here. Shift is, I think, is that how you say Shift? I don't know how to say his name. I always put it in, but I think it's Shift. And this is a really good thing. Go back and watch it. Some things like
Schiff. Peter Schiff.
Peter Schiff.
I'm willing to bet his family is part of the Schiff family from Cincinnati, who is a major financial services family.
Exactly. Yes.
They own the insurance company Cincinnati Financial, which is a massive proper insurance company, and many other businesses in the Cincinnati and Midwestern area. And the Schiff family was my insurance broker for years.
Oh, wow. Nice.
Fantastic story. It's a great family. That guy's related. Good for him. They've done a good job.
Yeah, I think he's one of the top guys who runs their financial firm. He's like I think he is the top guy. But but he was talking about really the history of how the U.S. dollar got off the gold standard and how really it was based off of debt. The reason why things were so tough in America was literally because of the U.S. debt, and actually how inflation kept pushing things up. And he goes, no, man, he goes, all that stuff is BS. Like what you learn in, he goes, I lived it.
Yeah,
I remember.
Anyway,
And no, it's okay. And what I thought was so interesting is that his view on everything. I sat there and was like, oh wow, that is fire. Like just listening to how he was saying, no, that stuff that you read in the history books, and he goes, no, this is actually what happened. And Tom Bailu sits there and goes, really? He goes, oh yeah, dude. Like you talk to firsthand people that actually lived through that. He goes, it had everything to do with. Really, man, I've got this nose here that keeps tickling me right here, bro, and I am like.
There's the dump button, ladies and gentlemen.
I am so sorry, man. It's just like it keeps tickling. I'm like, dude, Jesus help me. All right, so back to this. He was going into talking about what is actually happening with, what actually happened in history, and he was bringing back a lot of stuff. He goes, if you talk to people who lived through it and that were in the financial world, they'll tell you that the whole entire economic history books on what actually happened in the 70s was BS. Like it's not what actually happened. Like you talk to people who were firsthand, and during, I had to use the word 9/11, right? They'll tell you that's not what happened. What you saw in the news, we lived it. This is what we were experiencing. And so it's interesting to hear him talk about what happened in the 70s and basically what we're going through right now. So I loved it. If you guys don't know who Tom Bailu is, he's a cantankerous and builder of
dude has got 5 million followers on X. Let's put it like that. Got good influence.
Yeah, but also not just his X account, but also I like him that he's just open to hearing your views, and he wants to understand you. And if you can understand where you're sitting, what's actually happening with you, then that's a big deal for him. And I respect that. I really do respect that. Are you sure it's the right Tom Bailu?
I was looking at your screen.
Oh, that is that's his YouTube account. Sorry.
Oh,
yeah, that's his YouTube account. Yeah, he's got 4.5. A lot of it, but a lot of it, he used to be really into the how to become successful and changing your mindset, and how to have it impact your life. And it was really cool to watch it. I watched him, I think since 2021. Actually, I think I would say probably 2019. I discovered him when he would come out with the impact theory stuff. And then during COVID, he really started talking about a bunch of stuff that were different. And then now he's more on these kick. And from a financial standpoint. I think he's right on point. He's been preaching what I've been talking about, and now he has a much wider audience than what I could reach. And so I love the fact that he's really, and the biggest part behind, I think, not to sing his praises, but it's the fact is that I think he's too binary, but he listens to people's view and he runs it off a binary system of real world situations of like, this is what's happening. This is where, like, bro, you're pissing on my head and telling me it's raining. Like, you know what I'm saying? Like, he's, yeah, and he'll sit there and be like, this is actually what's happening. So I really like that he has a very pragmatic view on just finances, world things, real things. And even though he's I don't know if he's a billionaire yet, but I'm pretty sure he's close. But he lives very down to earth. He has a 9-to-5 job, even though he works like he works. He's a business. He's not a 9-to-5 guy because he's a billionaire or close to be a billionaire, but he works like that, and he comes from very blue collar life, and he makes it very clear, this is where the market is going. This is where we're headed. And I like that. There's no sugarcoating it. There's nothing. So if you guys want to watch somebody, he's on YouTube or on X, I think Wednesdays and Fridays. He does a show, and then he releases like deep dives as well as interviews with people who are leading experts. And I like him. I think he's cool. If anybody knows him personally, love to have a conversation with him about a couple things. I was the guy who brought up the idea of stable coins, a while back ago, and he kind of talked about it, but I think he's done more research now on stable coins, so he gets what I was trying to lead towards. And I think it's cool. So, all
right. Well, while you were talking about that, I did the search, and the Peter Schiff is not related to the Schiffs that I knew in Cincinnati. He's from New Haven, Connecticut, as a matter of fact.
Really?
Yep.
Holy crap. He doesn't live there though, right? Probably lives in Greenwich.
It doesn't. I didn't ask it that, though. It doesn't say that. I'm going to see if I can get the sound from Bloomberg to come out through here.
And he's probably going to also kind of elaborate on the data points that he sees, because the Fed does have a lot more information that's available to them, and he might
can you hear it
on what they're seeing and hearing from their constituents, and that should.
All right, ladies and gentlemen, I've got the note. This is fair use. We're reading the news here.
What he's going to be doing
in reacting to it.
Although they don't have a whole lot of information, the market's already fully priced in a cut. We'll have to see how he kind of discusses that.
Subhadra, thank you. It's good to see you. Subhadra Japa.
Those will be good for YouTube threads.
About anything, TK. You notice that these days? Absolutely anything.
All right, ladies and gentlemen, if you're still watching us, let us know here. Fire Chicken. While we're waiting for that, let's hear Pedro Monero's chart for Fire Chicken.
COVID, or maybe beyond that, somewhat here there, but now we have this shutdown. You said the word when we came in here in our show preparation. The first word out of your mouth was odd.
It's an odd one.
You said it's an odd meeting.
The only data we have, the most recent data, the only data we have is inflation, and headline and core around 3%, and the Fed Reserve set to cut interest rates at 25 basis points. I understand why, because they're worried about the labor market, but it's a kind of awkward situation.
Monero bucking the trend today.
And still to be looking to cut interest rates and inflation around 3.
And again, the dovish hawkish tilt of a traditional Fed meeting, maybe it's out the window. We'll have to see.
That Fed decision just around the corner. Let's check out the market. Start with equities. Equities this afternoon positive for a 5th consecutive session on the S&P 500, up by 0.2. In a bond market on 2s, 10s and 30s, a snapshot of fixed income yields higher at the front end of the curve by 2 basis points, likewise on 10s. With that Fed decision, here's Mike McKee.
Here's the news.
A divided Fed cuts their benchmark lending rate by a 1/4 percentage point and says they are going to end QT December 1st. There are two dissents as policymakers reset the target range to 3 3/4 and 4%. No surprise, Stephen Byron dissents in favor of a 50 basis point cut as President Trump wants. And Kansas City Fed President Jeffrey Schmidt dissents on the other side in favor of no move. The Fed's administered rates for interest on reserves and the primary credit rate mechanically decreased by a 1/4 percentage point along with the Fed funds target. As for the balance sheet, the Fed will stop redeeming maturing Treasury securities at the end of November. Principal payments will be rolled over going forward. The mortgage cap of $35 billion a month remains in place, but as of December 1st, all principal payments on maturing agencies will be reinvested in Treasury bills. Fed officials gave a nod to the government shutdown in their economic assessment, noting that, quote,
more
available
one hand
indicators
paying the other
suggest that economic activity has been expanding at a moderate pace. Job gains have slowed this year, the statement says, and the unemployment rate has edged up, but remains
Chuck is
low
watching the
through
5-second
August. More recent indicators are consistent with these developments. They changed the tense.
Better call the doctor.
Balance of risks, noting downside risks to employment
I don't get that
rose in
chart.
recent months instead of have risen. And uncertainty about the economic outlook remains elevated, they say.
He corrects the
There is no change
teleprompter
to their
people, the
forward
script
guidance.
writers.
The statement still says, in considering additional adjustments to the target rate, they will consider many factors. Guys?
Mike McKee, stay there. What a decision by the Federal Reserve. So you cut interest rates 25 basis points, widely expected. They MQT. A lot of people were talking about that coming into the decision. But the headline here is just how divided this committee is. Dissent cutting both ways. One saying keep policy unchanged, another saying let's go even harder and come by 50 basis points. Equities stay elevated, up by 1/4% on the S&P 500, but a bit of a turnaround in the bond market. Switch on the board against the fixed income, 2s, 10s and 30s. Bond yields just slightly higher by 3 basis points on 10s at 4.01%. TK, these aren't major moves in financial markets, but there is a subtle shift in this Federal Reserve. It's divided, and when you're this divided, it's difficult to provide guidance about what you're going to do next. Because if you're trying to lead this committee, trying to reflect a consensus that doesn't exist is basically impossible.
Edge of Bank of England. That's the first thing I thought about. I've got to go back and study when the last time this really happened.
What was that for?
Short.
One down, one hawkish, one dovish.
I took it short.
Pushing
I'm
against
like,
the chairman. And it speaks to the two parts of the country that are out there. My idea that there's two R-stars. You see it with the shutdown again, and part of America flat on their back. You've got. It's amazing to me to see Myron 50 beeps in, John, and let's say you want to go the other way. It's a 75 beep gap. I don't believe I've ever observed that. I'm sure I'll stand corrected, but there it is.
The last time we had a dot plot, there was massive dispersion. I think you know whose dot's at the top now, and we knew whose dot is at the bottom. Mike McKee, I believe, is still with us. Mike, the credible argument here. Are there credible arguments to do nothing and credible arguments to go even harder?
Well, the credible arguments to go even harder are a little bit harder to make because financial conditions are pretty easy right now, and the markets have been soaring in recent weeks. No change there. We did see interest rates rise a little bit this week as perhaps the markets got a little concerned about inflation going forward. Jeff Schmidt's case is probably easier to make in the sense that inflation is still rising, even if we are seeing the Fed cut rates. That could only be a problem going forward, is his view. And there are people on Wall Street who certainly share that.
Michael McKee, thank you, sir. You get into the news conference. Mike McKee there breaking down this decision.
All right.
The Federal Reserve reducing interest rates by 25 basis points this afternoon.
2019.
All right, Pedro. No surprises there today. However, all of our potential scenarios were represented by members of the board, by the voting committee there. Steve Myron wanted a 0.5 point reduction. Like I said, that the Trumpers would be very keen to a larger cut. And the other people on there that were still concerned about inflation, Mr. Schmidt from Kansas City, said it would be better not to move anything at all. And much like the Supreme Court, the committee was divided, but the chairman had his way. So 1/4 point cut Market really is not reacting. It did cause Pedro to win a little short there. He's happy about. Pedro in the money today. Thank you, Jerome Powell.
69, 18.75. That's my second target. And we will see if it continues down here. We are showing. Let's go to BTC here real quick. So, are you there? Can you hear me?
Yeah, while you're figuring that out, I'm going to go ahead and, before we wrap up the show, read a final ad here.
All right, excellent. Nice. Excellent. Yeah,
hold on, I'm going to read this ad right now. Ladies and gentlemen, are you looking for smarter ways to browse the internet and enjoy your favorite content without ads? Get the Perplexity Pro bundle with Rumble Premium for just $19 a month, $19.99 a month when you sign up before December 31st. It's normally a $29.99 value. With Rumble Premium, you'll get ad-free viewing experiences across all your devices and access to exclusive premium content. No interruptions, just the videos and streams you love anytime, anywhere. Plus, Perplexity Pro boosts your productivity with unlimited research, unlimited uploads, exclusive member perks, and access to the latest and most advanced AI models for faster and smarter answers every day. Save over 30% on this powerful bundle. Head to rumble.com/premium before December 31st to sign up and lock your premium experience. Ladies and gentlemen, you can also click the button below us here that says register for premium. But as always, there's a QR code over there, ladies and gentlemen. Click that and go see what the Rumble Premium and Perplexity Pro bundle is all about. Our advertisers would really appreciate it. Rumble would, Perplexity would. A lot of alliteration there. The Perplexity Pro bundle with powerful productivity. I can't even say it that many times. Anyway, hold your cell phone up to that QR code. Click it, go visit them. If you're watching on your cell phone itself, in the chat, there's a link right now that says learn more. If you're watching on the replay, ladies and gentlemen, thanks for getting to this part of the show. And in the description down below and or the comments, there will be a link to Rumble Premium and Perplexity. Thanks to Rumble Premium and Perplexity for advertising and sponsoring this segment of DYOR Live. All right, sir.
Interesting how this market played out. The sell-off into this market, it really wasn't that big of a move. I'm actually shocked to sit there and see, like, it wasn't that big. So, like, we're watching gold right now. Have a typical candle here, but gold, like, I expected to see gold kind of skyrocket here, honestly. And this just is kind of just playing here. I mean, you know, it's one of those things. I thought we were going to come up, hit that 8 period on the 8 period moving average here, and then see a sell off come down either to the 50 or down into this level here. So we're interested to see what actually happened. That we really didn't see a big move, and I think that is related to the dissension within the actual Fed group. Looks like he was really arguing whether they should hold it or not. So that's interesting that they actually decided to go through. Now they have to have, don't they have to have an agreement? Is it 50% or is it 51%?
I don't know what the rule is. I keep promising myself I'm going to research that, but every time I start to do it, I'm like, oh, this is the most boring thing ever, and I squirrel out to something else.
Let's research it then, because I've been waiting. So I'll probably just go through and just read through it. But I find this stuff interesting, extremely interesting, actually. See how it works. The fact is that it's set up in a way that's supposed to be confusing should tell you that it's they're
right.
They're messing with you. So yeah, man, but it's real interesting to see that gold here is just, I'm gonna check out Pax Gold and see what's actually happening with them. Pax G, Let's check out the perpetual. I just want to first see where the volume came in at.
PAX G up a little bit here today.
Yeah. 99. What's the value of gold right now? So the 39.91. What is theirs? 39.89. Yeah, it's fairly trading around the same values, which is impressive. Comparative to how we were talking about the big push. Federal Reserve to end quantitative tightening on December 1st, which the other part that they're stopping quantitative tightening shows, like, man, that's gonna be a bombshell for interest rates and bonds. So,
Just for those watching, quantitative tightening generally means that the Fed is pulling money out of the economy. When they do quantitative easing, the best way to describe it is they go to the banks and big financial institutions and say, what financial instruments you got? Mortgages, stuff like that. We'll buy all those things from you. Which gives cash to the banks, which allows them to lend, and which allows them to do the fractional banking thing and explode the money supply. The opposite, quantitative tightening, is when they say, okay, we're going to clean our balance sheet off and sell those mortgages and other debt instruments. It's called unwinding. Reduces its balance sheet by selling securities, or more commonly allowing existing bonds to mature without reinvesting the proceeds. They did mention some of that today. This removes liquidity from the economy, reduces bank reserves, and can lead to higher term long-term interest rates. So it's interesting. They said they're lowering rates, but they're gonna, but soon they will stop quantitative tightening, so that rates will naturally go down also. I think that's what they said. I have to go back.
Well, I thought they were also start to increase. I think they're going to have, because they're going to.
Yeah, they said they're stopping tightening and going to be. If they're stopping tightening, they would have to move to easing, which is then buying stuff from banks, which injects money into the economy. If they do that, that's what they have to print money to do that. The Fed just has to hit the button in order to inject money. They got to.
And so your dollar is going to lose more value. And remember how, Tom, you talked about how that same amount of money bought you that used to buy you 3 only buys you 2 chicken legs, correct? Well,
chicken boobs.
Chicken breasts. You're right. Boobies. Sorry to all those women. I'm bad. I mean nothing disrespect. But in that same sense, those $2, or excuse me, that same amount of money only giving you 2 chicken breasts, is now going to drop even less. And so how hard are they going to push? And if they're dropping interest rates, which basically means making money easier to get, which then allows you to, and I'm shocked that they actually did it. So it's really, and it was, it's 25% basis point, and this is what they were saying. But I'm shocked that they had so much fighting in between. It's actually really impressive. All right, boom, yeah. We're seeing, which means then that we should then see your 2-year. Give me 1 second. Let's go to the bonds here real quick. Bond years. Bonds are coming down. Interesting. So they kept the rate. So it's really, normally you see the reverse of that, honestly. I want to hear what Powell is going to say. Is he speaking now, or what's up? Yeah, but exactly. Buy more BTC. Exactly. Fire chicken. Exactly.
Extreme Car says, "Does Rumble Premium cut your ads?" Yes, it cuts your ads. And there's a you can get it for $89.99 US dollars a month. I mean a year, by using using the link below, and I believe using the promo code Studio. Just like the other ads. But it gives you access to when Pedro and I go into premium mode. into all the other Rumble creators that have premium members only type stuff. Pedro, I've got to get going here. I've got a full afternoon of work here that I got to get done with the missus here. It's a big day here in Ottawa. The missus is a lobbyist here in Ottawa, Ontario, and today the budget is coming out November 4th. The Prime Minister changed when the budget comes out, and today they're out announcing the initiatives that'll be part of the budget, and one of her clients' desires made it to the budget because of the Mrs. effort. So it's a big day for Mrs. Striking. And so when that happens, it means there's all sorts of emails and lots of to-do things to do, which I got to get going to help her with.
I get it. Listen, I get it. You don't like Mexicans. You want us all out of the country. And
out.
All right, dude. You have a great day, man. Be safe. I'll see you tomorrow, brother.
All right, ladies and gentlemen, thanks for joining us. Really, go ahead, Pedro. What are you saying there?
Oh, no. And shout out to all our viewers today. Thank you so much for coming, and we appreciate every single one of you guys. Thank you so much. Much love to all you guys, and be safe.
Ladies and gentlemen, as always, good week so far here. Still got a bunch of shows for you coming up. Probably even a little premium time. Probably tonight again to get our last hour of premium time in. So stick around. Put those notifications on. Look out for Rumble. Ladies and gentlemen, as always, my name is Tom, otherwise known as Striking, the man in the box. Next to me, Mr. Pedro Garcia, crypto chart analyst. Will be with you tomorrow again. We'll see you then. Laters. I'll be right there, honey.
Oh, wait, you got the...
All right, senor, our mics are off here. Hold on one second. Let me get rid of this music.
I don't think we dropped the loop. Like, once we went up to like the 20 plus, we stayed there.
Let's see. I didn't hit the end.